Give a few minutes for everything to get set up.
I can't find you. Oh, there you are. Okay, add me as a friend. I can see your last one, yeah.
Okay, we're confirmed. First time I've ever become friends with somebody on Facebook, live on Facebook. Okay, so yeah, YouTube is up and running, and Facebook, let's just get this up. Okay, we're confirmed. First time I've ever become friends with somebody on Facebook, live on Facebook. Just give a few minutes for people. There's 6 people watching right now, so that's pretty cool. Up and running, and Facebook, let's just get this up. You want to mute yours here, Sheldon?
Yeah.
Okay.
I got to mute my side?
Yep. Just your video. Somebody on Facebook, live on Facebook. Everyone watching, we're just getting set up, and then we'll be ready. Watching right now, so that's pretty cool. Up and running.
Oh wait, now have I muted it properly? Can you still hear me?
I can hear you perfectly, and I hear none of the background video.
Okay, good. So is it a few seconds behind? There's a lag, is there?
There is. That's why it's very important to mute it. Okay, so for everyone watching right now, my name is Brad Gates with Right at Home Realty. I'm a realtor here in Toronto, and I started this channel back in November of last year. And I put one video out there, and I didn't touch it for months. And then I saw the need for people that were coming here to either Oshawa, Whitby, Ajax, or Pickering, and having no idea what the area was actually like. So I started the channel to help educate people, because if you're coming to a new city, and I did it back in 2012 when I moved to Oshawa, and I had no idea what was going on, and I had to rely on my realtor at that time. So I figured, hey, why not, when I'm meeting people at open houses, instead of me having to explain everything, I can say I have videos out there for it. So that's kind of what started it. And I've had people kind of reach out from all over the world that are looking to move here. And I had no idea that there was people from Singapore or Nigeria or Switzerland that even knew Oshawa existed. But sure enough, they're coming here. So that's me. And then I have Sheldon on here with us. And so he's I'll let him introduce himself, and we'll go from there. So Sheldon, it's all yours.
And we'll just say quickly hi to Aditi, who just said hi to us in the chat there. Thanks for stopping in. My name is Sheldon Brow. I'm a mortgage broker with Gemba Finance. We are a Canadian company. We do mortgages right across the country. We can do mortgages in any province, even up north in Nunavut. And we're doing most of our business on the East Coast, as well as in Ontario, working closely with Brad.
Yeah, so that's it's been really helpful. So Sheldon and I, we put one video out a few weeks ago about just mortgage secrets, because a lot of people that reach out don't fully understand the mortgage process. And to be honest, I don't fully understand it, and that's why I didn't do the video myself. I'd rather refer to a professional that is able to kind of explain it in ways that can make most people understand it. And so it's been good so far. And so I figured, why not? Because there's a lot of questions coming of people that are moving here or just getting mortgage for the first time. And they're always asking me the same, they're asking me questions that I figured, do a video, or we can do a live. So anybody who has these questions, they have the opportunity to ask them. They have me. So if it's a real estate question or an area question about the Greater Toronto area, I'm here to answer it. And if there's any mortgage questions, then I'm just going to refer it to Sheldon, because he can explain it in things that make just complete sense that you can actually understand, and makes it a little easier. Instead of having to call somebody specifically to ask, you can just type in your question, and then we'll do our best to kind of answer it. So I do have some some questions that over the last like 6 or 8 months that I found that I've been asked in different ways. So I figured, why not do a live, and then I can ask Sheldon, because I've always asked him these questions anyways, and then it gives him an opportunity to answer them, and then so that, you know, hopefully other people out there that have the same questions, they can ask them. So the first question is, because I get some people that, you know, they're not moving for 4 months or 6 months, and they always ask, you know, when should they start the mortgage process? So Sheldon, if somebody is looking to get a mortgage, what's the earliest that they can actually start the mortgage process?
Well, that's a really important question, because a lot of times people will make an assumption based on, you know, we have these cute little apps like Credit Karma and Borrowell and Mogo, that different places where you can get credit scores. And they think, well, I've got a good credit score, so when it's time for me to go apply, I'll just apply and I'll be good to go because I've got an awesome credit score. And I think that the punchline answer to what you're saying is, the earlier the conversation, the better. It's never too early to reach out to a professional, whether it's somebody at your bank or a mortgage broker. Nobody's going to charge you for their time to assess your situation. And that's a good chance for you to start evaluating that person and judge how responsive they are and how much they seem to care, because it's going to be the biggest purchase of your life. So that's something that, in my opinion, you want to start that conversation as early as possible. Worst case, if it's super early, even 1 or 2 years before, you're getting the insight that you need to make sure you're in the best position to get what you actually want to get when that time comes. There's a lot of things that can really change, a lot of tiny things that can happen that can change your situation as to what you qualify for. And it might be a case where you really want to make sure to qualify for 600,000 versus 500,000. So the earlier you can get insight into preparing your financial situation and making sure you're going to have the document in place, the better, in my opinion.
Yeah, so I guess it's kind of good that you mentioned that, because I've always said, when people ask that is, and that's kind of when I shoot them the video that you and I did together, and just said, you know, this is something that, why not ask a mortgage person? Because they're going to know your situation and what that can be done. So it's good that you said that you can never reach out too soon, even if it is a couple years out, especially for people that buy pre-construction and they're not even getting the house for 2 years. You want to make sure come that time that you're kind of prepared for it, I guess.
Yeah, and especially in today's market, you know, certainly in Ontario and you know, in several parts of the country, there's a lot of hot markets. So you really want to be prepared. You want to know you can confidently go out and shop. You don't want to be doing guesswork, going around viewing houses with a realtor when you really don't have certainty. And you know as well as I do, Brad, we've seen some situations before where if you're not dealing with somebody really knowledgeable that's able to give you a really good pre-qualification or pre-approval, depending on what you're doing, then you may end up, you know, making an offer only to find out later on that you're not actually approved for as much as you want. So have those conversations early as possible. And I think it's really important that you're doing videos like this, Brad, because a lot of people, you know, it's a huge product that you're getting, and we don't want people looking at a mortgage like applying for a credit card or applying for a loan. It's something to be taken very seriously. And you say that the clients ask you the same questions all the time. And we do say a lot of the same questions as well, but people can only ask what they know. There's a lot of full and fair disclosure and interesting tidbits that people would want to know if they knew that those tidbits of information existed. So you want to have those conversations early. You want to make sure that you're asking the broker, is there anything additional you'll think I want to know, and not just questions that you're asking as well, because people only know a limited amount about mortgages. So
yeah. And one thing, I guess maybe we can kind of bring it up right now. And so like you and Chris, who's your business partner, you guys in the last, I don't know if it was the last 2 weeks or the last month, you kind of stepped in twice, and you shed a different side of light on situations. And I'm not going to go into like names of my clients, so we'll just call them Bob and Bob. So the first Bob situation was, and I don't think I've had any recent clients named Bob, so I think we're safe in picking that name. So Bob 1 was dealing with a mortgage broker that pretty much told him that they were pre-qualified for an amount without really verifying anything or collecting any of the information until a few weeks before closing. And then by the time all the information was collected and then submitted to different lenders, it turns out what Bob was told was completely different than with what Bob was actually able to get. So that was like the one situation where dealing with somebody who is just, they'll put effort into it and they'll communicate things, makes a big difference. Because I know with Bob, if they knew all the facts up front, they might not have gone to a purchase price like that because it stretched them a little thin. And so that was Bob 1. And then Bob 2 was in a situation where, again, dealing with a mortgage broker that took Bob's information and just shot it to, I don't know, was it an alternative lender or a B lender?
It was a B lender. Alternative is more so where they're talking about private lending, which gets a lot more expensive. And those are basically high net worth people that are lending mortgages out into the industry. So there's an A, which is your conventional lenders, your big banks, many of the monolines that are getting the best rates in the market. There's B mortgages, which basically is a little bit higher rate and a tiny broker fee. And it basically has a little bit more flexibility for lower credit scores or higher debt ratios. And then there's alternative lenders, which are, potentially very flexible. And one thing that you mentioned is, that they were qualified and told to go make an unconditional offer, which we should go a little bit more into detail as to what that is in a moment, without seeing documents. So that's a red flag right there. I would say the vast majority of the time, if you're dealing with a mortgage broker that has a good amount of experience, you're going to be able to get a really good, confident answer out of them. It shouldn't be very often that you're having to get that type of second opinion. But if they haven't collected any documents up front and they're telling you to go make an unconditional offer, that's a red flag right there. We can go based on verbally what we get from a client and, kind of give them an idea. But before, going and saying, yes, unconditionally, I want to buy this house, you have to make sure that you've submitted documents because unless you fit in a very tiny little box where you're salaried, you've got a great credit score, and your debt ratio is very comfortable. And again, we'll get into what that is in a moment. Then, there's a lot of variables that come into play, even including the property. So we've got a question from Aditi that says, is getting a mortgage difficult for a person working on a contract job versus working full time? And I just wanted to refer to that question real quick because it speaks to what I'm talking about right now, which is basically if you don't fit in that tiny little box, which is full time, salaried, or you're guaranteed hourly 40 hours. As soon as you're part time, you've got to be 2 years, contract job, self-employed, foreign buyer. There's a ton of variables and a lot of different programs. There's over 30 lenders across Canada. So there's a lot of different interesting things. And even I would say, because of the first question that you asked, when is too early? Some people think that they'll easily qualify and they wait till the last minute. And some people don't think they qualify at all and don't even have the conversation because they just feel like they just can't qualify. And I've gotten lots of people mortgages that didn't think that they could do it. And they just run the numbers and they realize it's something they can do. So it's always good to have that conversation. It's not, a complex mathematical assessment for a good professional qualified mortgage broker. They're able to do an assessment usually pretty quickly and let you know within 24 hours a good idea of where you stand.
Mm-hmm. No, that's true, because I've even had that a few times where like the husband has the full-time job, the wife is a contract employee or a contract hired as contractor, or vice versa. And that's always been a question that I wasn't entirely sure. I just said to start now to find out, because you don't want this to be a problem. And so that was a really good question, Aditi, that people have asked recently as well. And back to dealing with Bob 1 and Bob 2, I guess the number one thing that I just want people to get out of that is make sure that the people you are using are doing their job properly. Because I don't know if you touched on it, but With Bob 2, if their file was submitted properly before getting an accepted offer, they might have been in a different situation where they could have bought easier, like without the headache. Like, so last minute, it could have been done easier. So that's where I just like to stress with people. I always prefer you would deal with Sheldon and Chris because I have an open communication line with them. And example, it's a Sunday at 8:20 p.m. and Sheldon is here, and it doesn't really matter. So that's where it was like, that's always been my preference. Plus, I knew that they're going to do the best that they can. So when dealing with mortgage brokers or even realtors, you just want to make sure that they're going to have that open communication with you, because dealing with the right people can make the process easy. Dealing with the wrong people can make the process very stressful and not fun. And buying a house it's a friggin' fun time. Like, you get to go shop for homes, you get to negotiate deals. Right now it's crappy because it's such a seller's market that everything is going into multiple offers. I just had an offer today and we were one of 13 offers, and we went like 75,000 above list price and we still didn't get it. So that just goes to show how competitive some situations are. But imagine having the frustration of getting outbid. A realtor that is non-communicative or something, like hard time going out to see properties, or dealing with a mortgage broker that's not giving you the proper information. This is a big opportunity for this to be a nightmare. But if you're dealing with the right people, it can be fun. And that's the number one thing out of it. So I think that
what I'd share in regards to that is just, maybe not everyone will want me to say this, but when you're dealing with a big product like this, you're buying a house, judge the people you're dealing with harshly and quickly. And I don't mean too harshly in an insane way, but basically, you want to have a friendly demeanor. I've seen some pretty cold exchanges out there between brokers and their clients, including some recently. Responsiveness is key. I mean, you basically want to be really, really comfortable with that person. You want to have confidence that they know what they're talking about, that they're friendly, they're really responsive to getting back to you. And there's three major things. And just to more clearly answer Aditi's question, it's not difficult for a person that's contract. It just means there's a little bit more work required, maybe a little bit more documentation, because it's almost like going into a courtroom when it's a sensitive situation, or it's not in that tiny perfect box of salaried great credit full time. So there's essentially three things that the underwriters focus in on. Everybody always thinks it's just credit score, and if my credit score is good, I'm approved. Debt ratio is the number one mortgage killer or credit killer in general when people are applying for lending. And it basically means if 42% of your gross income is going out on the new housing that you're looking to get, as well as the payments that you have on the credit bureau, then it's presumed to be outside of your affordability by the lender. And these are federally regulated guidelines, so it's not like they can always go and do whatever their heart desires. If you have over a 700 credit score, you can go up to 44%. Nobody at home is going to really go calculate their own debt ratio, but that's something, again, have that conversation early. And there are calculators even online for those that do want to do it. So the credit score is number one. Your debt ratio is number two, which we'll get into that again a little bit later when we get into what those mortgage killers are, Brad. And then the third one is the notes. So notes really matter. The intelligence of the notes and the depth of the notes and the full disclosure of the notes. You're explaining to somebody, what happens for certain things. So if somebody has a glitch on the credit bureau, you want to be able to put in a good explanation for that. If there's job transitions, so the notes that your broker is able to make is really going to be able to rely on their critical thinking and working within the guidelines, staying honest to represent the clients outside of that box scenario as intelligently and as fully as possible, so that when the bank gets that file from the mortgage broker, they're not mulling over it for days at a time, but they've got a really good representation in the notes. So credit score, debt ratio, and notes, which is why you really want to have a sharp broker, because notes is really important.
Yeah, no, it's really good points. Okay, so let's just see. So can you explain, and I'll pull up, I was snooping through your website to find the mortgage approval process. So I'll pull that up, and then you can kind of explain it, because sometimes, you don't really know where to start. So in explaining what the process is, it can maybe make things look a little easier than it actually looks to be, because I know when people reach out looking to buy a home, they have no idea what the process is like, and it seems very overwhelming. And it's the same thing with the mortgage process. If you don't know it, then it might seem scary or intimidating, but if you have it explained properly, it's actually an easy process. So Sheldon, I'm going to share your website up here, and then you can no, wrong one. Hold on, we'll figure it out.
I think you had it at first there.
There we go. So yeah, it just explained kind of what the mortgage approval process looks like.
So again, starting at step one, that's meet your broker. That can happen as early as you want it to. That's just a conversation where you're divulging the information as much as possible. I would say that the mortgage process is actually fairly easy. It's just a process of calmly navigating, getting the documents that whatever bank requires. There's never any point in humming and hawing about what they want, because you want to let them satisfy what they need to satisfy to lend you hundreds of thousands of dollars. So it's just working to make sure that you're having those conversations early, and then you can, even if it's again a year early, you can get an idea for your situation, whether it's contract job like Aditi mentioned, self-employed, part-time, whatever it is, seasonal work. What do I need to have even a year from now? And maybe if your employment changes, that would change in a year, but we can tell you as of today, this is all the documentation that you'd need. So that initial consultation with the broker is just discussing, what is the timeline? When are you looking at buying a home? Is it a month from now, 6 months from now, a year from now? And we can assess everything based on the current situation. If it's something that you're ready to pursue now, then you would go ahead and gather that list of documents. And most mortgage brokers nowadays, I would hope, certainly with us, have really easy methods for you to upload those documents directly all in one place. And then on our side, once we receive the documents, we have to verify that those are authentic, that they're satisfactory to the lender. Sometimes if somebody sends us a bank statement that doesn't have a name on it, we can't use that. It could be anybody's bank statement. There are certain points of logic. There's a joke in our industry that underwriters aren't allowed to think, and all that means is that, because no disrespect to underwriters, we love and appreciate our underwriters' work, but it just means that they have strict policies they have to follow. So you really want to show respect to their job and the fact that they're lending out a large amount of money, and give them what they want. For example, verifying a document might mean a pay stub can't be stale dated. It can't be more than 60 days old. Then we gather all these documents that are verified. We know that we've validated the information that a client has given us verbally during that first consultation. And we submit that application through an electronic system with the documents into the lender. That's typically taking maybe 2 to 6 business days, depending on the lenders. Right now, it could take 10 or 12 business days. If a lender has a really low interest rate, often they'll get a lot of applications and they can be a little bit busier. So that timeline as to when you'll get a decline or an approval or some type of an update can fluctuate by a few business days. Once we get the loan approval, we usually let the client know within 1 minute of us knowing. And we basically send a commitment letter that states this is what the lender is stating that they'll offer you. It's usually subject to conditions, like it's subject to a satisfactory appraisal. They don't want to, maybe you're approved as a person and you've supplied all of the documents, but when they do the appraisal, the inspection, if there's a crack in the foundation that you're okay with, it doesn't mean the lender's going to be okay with it. So they'll name different things on the condition, like maybe you've given us everything, but you still haven't given us a pay stub. So it's approved subject to a pay stub. So the conditions are the things that are yet to be satisfied, and the commitment letter will at least give you an idea of what's your interest rate, what's your payment look like, and this is the remaining stuff you need to give us to satisfy that and make it official. And then we go through the next few days of satisfying the conditions, getting the appraisal done, getting any outstanding information or documents, and then everything is sent over to the lawyer for them to sign through the legal process. And that's when you officially close your mortgage, and I guess you receive the keys on that day that you sign.
Okay. No, that was really good. I think it will help everyone understand what the process looks like, because if you don't ask and you don't have somebody to explain it, there's no way to fully find out the process and how little, like pretty much if by dealing with a professional, all you have to do is initially make the phone call, and then everything else is kind of geared or guided by them, and they'll ask for what they need, and all you have to do is grab it and send it, and then it's kind of taken from there.
Well, I do want to mention on that one part, just because you mentioned the phone call, it's 2020. People are very shy around financial things, and we're definitely doing business in a technological way. We're working remotely. Again, we're able to service right across the country. So if someone just wants to text us or email us, they're able to do a lot of stuff through uploading directly to a portal that we have. We're able to do a lot of it where the client really gets to choose their method of engagement. We can talk on the phone to them as little or as much as they want, and it's pretty flexible process as far as how we work with the client.
Yeah, and no, that's good to know. And then, so another question that I've had come up recently is in regards to, because you explained what the mortgage process looks like. So how does it differ much, or maybe what's involved if you are coming from the States to Canada on how you would go about qualifying for a mortgage?
Well, sometimes the U.S. can be a little bit easier than other countries because we have a closer relationship with them, and some banks may be more comfortable with a U.S. non-resident. Again, if you're staying in the U.S., it's one thing. If you're moving to Canada, it could be a different situation. For example, if you come to Canada and you've got a work permit, you might be able to get as low as 5% down. Typically, the foreign income or somebody that's a non-resident is looking at a 35% down payment. Really, if you got a work permit or if you got a couple years of income claimed on an actual Canadian tax return, there's a lot of different programs out there again. So really, it's very much a case of every situation is different, but the range could be anywhere from 5 to 35% down payment that somebody coming from another country or the U.S. Would be looking at. And a lot of people that are coming from the U.S., even if they have the cash to buy a home, they'll often still take advantage of the loans right now because the interest rates are super, super low. And it is a great time to move to Canada. I mean, we supposedly, according to some surveys, have the #1 quality of life in the world. So we see a lot of people moving in to Ontario right now and right across the country.
And I don't know much different because I was born and raised in pretty much the GTA. So I don't know what it's like to live in other countries or even different provinces. I've visited some of the provinces, but in terms of living there, I have no idea what it's like. So I guess if Canada is ranked based on highest quality of living, I just kind of take for granted because I don't know any. But if you are coming, because I've had some people that like they're living in different countries and then they're coming here, and some of them have been working for companies where they have a location here. So they've been living in a different country and the company they work for is here. So they've been paid in Canadian dollars. So that's like one person that would reach out. Another person is somebody who has, $200,000, $300,000, $400,000 that is coming here from a different country that has no employment set up or anything like that. With being in that situation, is it possible even to get a mortgage?
It is possible, and there's so many different kinds of situations. So somebody can work for a Canadian company that's international, which we had one recently, was a sea captain. And it's also, where's your bank account? Are you getting paid in euros into a European account, or is it coming into a Canadian account? You got to be focused on, and this can be tough for a lot of people where there's a lot of money movement coming in from different places. We need to verify 90 days worth of money for anti-money laundering purposes in Canada. This is not something anybody has the option to get around. So, if you've got money coming from 3 different bank accounts and it's coming into one place, you got to be able to show the 90-day history of everywhere that it's coming from. So depending on, what industry, sometimes even there's some other industries that are more high risk than others. But for the most part, there is a solution out there with one of the many 30 lenders for everyone. It's just a matter of representing the situation intelligently in the notes and getting those documents in there. I would say that, there's not a ton of situations that aren't possible unless they have many problem variables. It's just a matter of giving that, working closely with the mortgage broker, supplying as much as possible to make their job easy to get the lender on board. There's a lot of different situations, the way that people get paid living all over the world, people living in Dubai, getting paid getting paid in Dubai, and there's no tax there. So then transferring the money here, there's a lot of situations that we've gotten approved from, many different parts of the world.
Yeah. And so I guess before I jump on to other questions, because people have kind of been coming and going from this. So if you've just kind of clicked on and you're watching, so my name is Brad and I live in the GTA, and I started this YouTube channel to help people that are either looking to move to the Greater Toronto area or they're looking to move to different parts of the GTA. So I just saw a question pop up there, and we'll get to that in a second. Maggie, thank you for asking the question. But the whole purpose of this is, if you have questions and you want the answers for it, you have a realtor and somebody who lives in the GTA who can help answer either neighborhood or what's going on in the real estate market. And then if you have mortgage questions, there's Sheldon that is here to answer those questions for you. So you got two different people that can answer a ton of different questions. And that's just kind of, I just want to take a break from that. And if you want to watch, we do have a lot of videos on the Living in the Greater Toronto Area channel, which will cover off what to live in Toronto, Pickering, Ajax, Whitby, and Oshawa. And then there is currently one mortgage video that Sheldon and I did. We are working on others to kind of pop up there, because the one that we did has been helpful to a lot of people that have reached out. And so those are videos that are coming. So you kind of have to subscribe to the channel if you want to be notified when these videos do get released. So that's just, we'll take I just wanted to stop us in the middle here and just explain all of that for the people who are just signing on now. So the question here is from Maggie. So she's, I'm a citizen, but apply mortgage with overseas salary. Does she need to pay with 35% down payment?
And again, with any foreign buyers or overseas salary, you want to psychologically prepare yourself and assess your situation. Can I do 35% down? It's very possible that you won't have to. It's, again, are you getting, how's the money coming into the Canadian account? What kind of dollars are you getting paid in? How long you've had that job? Are you claiming it on, you're making an overseas salary, but where are you claiming it? Are you claiming it in Canada, or are you claiming it abroad? So it's possible you'd have to do 35% down, Maggie, but it's certainly worth a conversation, again, to talk about your specific details, because it may be possible for you to get a lot less percentage down.
Hopefully, Maggie, that helped, because it is a question that, it's not easy. You can, if you're living here and you want to buy a house here, it's pretty okay, it's complicated still, but it's not as complicated if you're living from, if you're a citizen and then you're getting paid somewhere else, but you're living here, it's just complicated. So Maggie, I'll post Sheldon's information there, and feel free to reach out to him. He's a great guy, easy to talk to. So he's definitely able to help answer those questions if you do want to kind of get into more details to find out, based on your exact situation, what you would be able to kind of, we'll call it, get away with.
And it's probably a pain in the butt sometimes for some of these questions, where it's like, well, can't you just tell me definitively? But in this type of industry, there's so many different variables for each person's situation. And there's other things that you can do, where you could say, there was somebody that we had, again, that was in Dubai, and because of the way his salary ran and he got paid there and he claimed it all in Dubai, we actually had to get a co-signer in Canada that was a relative of his, and then we were able to do the 5% down. So there may be other things that we can recommend, depending on what the client needs are. And a lot of people, cash flow is king, and they want to often put the minimum down, except for those people that want to put a good amount down to keep their mortgage payment low.
Yeah. Well, Maggie, hopefully that helped. So I guess another question that It wasn't until recently of actually dealing with you and Chris that I even knew that there was a difference in this, which is kind of funny. But like I said, I never understood mortgages and I never pretended to. If somebody had a mortgage question, I was always refer it to somebody who could answer it with 100% certainty. So for the first one is, how do the mortgage rates really compare for an insured mortgage, which means it's less than 20% down, and then an uninsured mortgage, which means it's 20% down payment and above? Am I saying that right, Sheldon?
Yeah, so it's an interesting little change that happened a few years ago to make it a little more confusing for people. They continue to make changes to mortgages and in both directions, and they say that, well, we're doing this in the positive, but then they do something else in the opposite direction. So the difference between insured, uninsured, and insurable, it used to just be called high ratio and conventional. High ratio is insured, and conventional would be uninsured. So basically, the easiest way to look at it is, what percent of your home are you putting a down payment? If you're doing anything up to 19.99%, then your mortgage would be insured. It goes through one of the three insurers in Canada, which is Canada Guarantee, Genworth, or the one that most people are familiar with, which is CMHC, the Canadian Mortgage and Housing Corporation. And basically what that does is it protects the bank. If you're doing, the reason that these insurers exist is because typically if you were to put less than 20% down payment on your home, your interest rate would be a lot higher. But because when you do it in Canada, anything less than 20%, one of the insurers jumps in. The insurance cost, which is on you as the borrower, goes on to the mortgage, and that ensures you're able to get some of those amazing interest rates that are out there right now. Insured actually yields you the best interest rate in the market. But you can only go up to 25 years as an amortization, or the total life to pay off a mortgage. Now, if you have 20% or more that you're putting down on a home, you can have a little bit softer mortgage payment. You can go out to 30 years. That's the real difference, is you're going to get a tiny bit better rate if it's insured, typically about 0.3% or so, I'd say, as a ballpark. You wouldn't take that definitively because rates are changing all the time. And again, you're going from 25 years versus if you have 20% or more, you're able to go up to 30 years. Now, the third one that they've kind of added in for us, which is insurable, means that you have 20% or more that you'd like to put down, but you want to be able to take advantage of those better rates. So you wouldn't be able to go out to 30 years. It cannot be a rental property. It can't be a property that's more than $1 million. And your insurable and your insured are almost essentially the same. And for the most part, you're going to get close to or the same rate as an insured interest rate. So conventional is something that you don't pay the insurance to the insurer. That's uninsured, and you can go up to 30 years. Insurable is also 25 years, but has the rest of the items kind of the same as the insured. It's really hard to explain in a way that clients can really always understand quickly, and we have visuals that we'll typically send to somebody's email for that, because it's a lot easier for people to see an actual visual and understand these things. But really, you just want to understand that if you have less than 20% down, it's a better interest rate because the bank is protected with an insurance that you're paying for, and you get to go to 25 years. If you're putting 20% or more down, you're going to get a tiny bit higher interest rate, but you can go out to 30 years for a softer mortgage payment out front.
Okay. So one follow-up question to that, but Prathiba, I do see your question. We'll answer that in a second. But just to top up that question, I guess, with can you get a 5% down payment with a like a B lender?
So not with a B lender, and you're really not going to see that with a private lender as well. They're really trying to, a private lender or a B lender is typically taking a little bit more risk. So they don't want to have such a small down payment, because if the housing market fluctuates much, then you may end up owing more than your home is worth. So usually if you're going with a B or a private lender, you've got to have a bigger down payment. With a B lender, it's 20%. You might be able to go 10 or 15% with a private lender. So really, the A lender is where you're going to get to do the 5%.
Okay. So I'll just pop up the question here. So it is from Pratibha, and they are, from a timeline perspective, I guess this question, assuming a 5-day condition in the offer. Let me just see the rest of it. It didn't all show here. But does that mean that I have only 5 days to find a mortgage provider? And they're saying that they are pre-approved.
Okay, well, I would say, first of all, always understand what does pre-approved mean. It's commonly misunderstood. You and I have had this conversation, and we've made a good video on this before, Brad. There's pre-qualified, there's pre-approved, and there's fully approved. When we looked into the mortgage process, we saw that we wanted to meet all those conditions. Once the lender says that you're approved conditionally, subject to these things, getting us the pay stub and the appraisal, whatever's outstanding, really, you want to get fully approved. There's only a couple of lenders in the industry, maybe 2 or 3 of them across all of lenders, to do real pre-approvals. And in order to do a real pre-approval, you have to have supplied all your documents and gotten your credit check done. If you haven't done that, Pratibha, then you may only be pre-qualified. So take that word pre-approval lightly. Make sure that whoever you're asking, say, is this a real pre-approval or is it a pre-qualification? Because it's often confused. And it does mean that you have only 5 days to confirm fully with your mortgage provider that you're good to get this mortgage. And you want to be able to have the appraisal done and everything else and have all of the conditions satisfied, all of the documents in. You don't want to just still be in that process after that 5 days. Everything, all of your documents have to be in, the appraisal should be done, and your credit should be checked. If all of that is not done, then you're not official.
Yeah. Well, I guess the cool thing about having you on here to answer the mortgage side of it is, so you have your perspective of being in the mortgage industry, and then my perspective. So assuming you do have a 5-day condition, you do want to notice, or you do want to make sure that whoever you're using has all of your documents, because time and time again, you have it where you get I've had clients being told that, like, from their mortgage broker or whoever they're using, to, okay, we're good. All we need is an accepted offer. And then, so I take that as in, they have everything submitted. So I would ask them just to confirm, okay, so you have given them all of your pay stubs, you make sure that the credit, everything is done. So all you need is the property that they can make sure will appraise at its value, and everything else is kind of like done. And there's been times where it's like the mortgage broker doesn't have any of their documents yet. So within that 5 days, you have to make sure that your mortgage broker has submitted everything. Then the bank has looked at it. Then the appraisal has been done. So there's a lot to get done in those 5 days. And that's often time and time again where you see needing to ask for an extension, is because it took like 3 or 4 days just to get you approved for the mortgage. And then now you're trying to get everything done with that 1 day remaining, plus have waivers or notice of fulfillment, all those things signed. And it's just, if you're not prepared properly, you might end up losing a property because you can't do everything within the 5 days. Like, I've seen it being done within the 5 days, but you don't want to put that much stress onto it. Again, back to, this can be a fun and enjoyable experience. You don't want to be stressing over, my conditions expire tomorrow and I still haven't been called from the appraisal. Like, it's just a headache you don't want. So get everything done properly initially, so that by the time you're submitting those offers, if you do have an offer that's accepted with a 5-day condition in it, that you're going to be able to meet it within that time frame. And I've had it where people doing it properly, they're able to firm up 2 days into their conditional period because they did all of the legwork properly.
And just to piggyback off that real quick, Brad, it helps hugely if you can have a mortgage broker and a realtor that collaborate, like yourself and myself. I mean, Brad and I can call each other all hours of the night to make sure that we're managing things and just keeping the client updated. And having people that can work together to set the right expectations, because it's bad look for the seller. And correct me if I'm wrong, Brad. And it's just tough on everybody when you've made a bunch of assumptions. It happens all the time. Unfortunately, there's a lot of people in the banks. There's enough brokers across Canada that won't properly assess things, and they'll be like, just go out, make the offer, and blah, 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 blah. But really, they haven't properly prepared you. They haven't made sure that you're actually clearly good to go, really delved into your situation to make sure there's no surprises. And it's easier when you have that good conversation and you've got somebody that's kind of working closely with your mortgage broker, because you can choose the right amount of days that you need. And there's a lot of variables. There's, how many offers are on that home, right, Brad? How many multiple offers do you have? You know that sometimes you don't have a choice but to work on a tight timeline. Then you want to be more working with mortgage brokers like us, or many of the ones that exist that are working 7 days a week or into the evenings and outside of bankers' hours, because you have shorter timelines and you need to work longer and harder. And clients will need to have to work harder to get that paperwork.
Yeah.
And also, I just quickly want to mention that, again, the timeline, there's many, many different variables. So even if your realtor does an awesome job and your broker does an awesome job, it's not to say that an appraisal company is going to be able to. Right now, the whole market, especially in Ontario, is going crazy. So it doesn't mean that you're going to be able to get an appraiser out there for maybe a week. And then maybe you'll have to pay a rush appraisal fee of $100 or $200. So there's a lot of variables that can be outside of our control. That's why if you have a mortgage broker and a realtor collaborating on the effort, you can make sure to communicate to the client, the seller, and everybody, here are all the variables, here's where the appraisers are, and choose the right timeline.
Yeah. And I guess the second point to Pratibha's question here, or I guess her response to our answer, saying that, they started looking like they had everything done before they started, and it looks like they got an offer accepted on a property. And now within that 5 days, they're going to try and shop the rates to make sure. So if you're dealing with individual banks, I guess you kind of have to do that. But if you're dealing with a mortgage broker that can shop all of the banks, they're kind of doing all the legwork for you so that they know, based on your situation, which bank is going to have the best rates for you. Is that correct, Sheldon?
Yeah. And I would say, just to piggyback off that and Pratibha's question there, they mentioned mortgage specialist. And usually if you say mortgage specialist, I'm assuming it's somebody that's at the bank, that works for the bank under that brand. If you're working for a mortgage broker that's good, then they should have you the best rate in the market for your situation. Again, if you Google best mortgage interest rate and you see, 1.8, that doesn't mean that fits your situation, your down payment, your loan to value, your credit score, your type of employment, and your holistic situation. There's tons and tons of mortgage interest rates out there. So as a broker, I always tell people we can get the best rate for your situation. You don't necessarily want to be trying to rate shop too late in the process, because you have to have your mortgage fully approved 10 business days before the closing, Pratibha. And again, if you're just working with a mortgage specialist at one bank, that would be a lower probability that you have the best rate in the market for your situation, because they only know their brand and their policies. But if you're working with a broker that has access to over 30 lenders, often they can search the lending and the products with your own bank as well. So you don't necessarily need to deal with a mortgage specialist at your bank, because your broker should have access to the vast majority.
Well, that's really cool. Another, I guess, question from Maggie. She asked a question earlier about getting a mortgage, being a citizen, but then having income come from a different country. So I guess her question was, so in general, how long would the pre-approval amount last? Maggie, is that what you mean?
Yeah, I'll answer that for now, assuming that's what she means. And if she clarifies, we'll switch the answer up. But pre-approvals generally can last. It really depends on the lender. Some of them could be typically, I'd say, between 60 to 180 days. It'll depend on the lender. It'll depend on, if you've submitted an actual property. Again, so that is her question. I would say typically it's between 60 to 180 days. It depends on the lender. Lenders don't have to hold them for any certain period of time. Typically when you submit, especially if you've submitted with a property and they hold that approval for you. Sometimes they have to hold an approval for like 2 years because a condo that's being built isn't complete yet. However, in those cases, Maggie, they're not able to guarantee your rate until 90 to 120 days before the closing date. Because if you don't have a condo that's being completed till 2 years out from now, they can't give you today's rates then. Typically, when you submit a mortgage application, your rate is held for 90 to 120 days, depending on the lender, from the date that you submit. So if the rates go down in that 90 to 120 days, depending on the lender, then your rate would go down also. But if the rates go up, you're protected from that increase. So if you have something that's closing 2 years from now, because it's not built yet, then they would choose the closing date, whenever your closing date is going to be, let's say April 2022, and they would, April 15th, 2022, they would do it between a 90 to 120 day look back to see when was the lowest rate in this period before the closing date, and that's the rate that you would get. That's a extra long, detailed answer to your question, but hopefully that helps.
Yeah, I guess there's no quick answers with mortgages, because it's you're dealing with finance, and finance is not easily explained.
Yes, if anyone's giving you too quick and short of an answer, then it might not be.
They don't care.
Yeah,
and yeah, so that's that. And then, so just some other questions that that I've come across, and so we're dealing with mortgages that are going to be straightforward mortgages, like a house, condo, something that's easy to compare. But what happens if, like, what kind of issues could you be running into on the mortgage side of things if you're dealing with unique house purchases, or like an appraisals on that even?
So I ran into a lot of those situations. I'll say a few things in regards to that. So we've got clients right now that are doing about $200,000 in renovations, and they haven't bought the house. It's a new build. So there's three kinds of mortgages. There's, I'm purchasing an existing home. There's, I'm purchasing something that is not complete yet. So it's going to be like what's called a turnkey. It means the builder's going to build all of this. It's going to be complete on this date, and then I'll buy it. And then there's a progress draw, which means that I'm going to build my own house and I'm going to take money out in pieces, which is a little bit more work for the client and a little bit more fees in inspections. But basically, with unique homes or renovations, if you're building a pool or you're putting a statue of yourself that's like 10 feet tall in the front yard, that's not something you should assume is going to add value when somebody goes to do an appraisal. A pool is something that you have to maintain. Not everybody wants a pool. Certainly, presumably, most people aren't going to want a statue of you in the front yard. So and even in British Columbia, we've done for a client lately that's building this dream home, off-grid, solar panels, this beautiful kind of carriage style home out kind of in a rural area outside of town. And it's really hard. We've seen appraisals come back from that house all the way from 450, 500,000 all the way up to almost $1 million. So there's really a huge difference in the way that different lenders will view unique properties. If there's it's got this really interesting design, like the house is shaped like a horse or something. Yeah, sure, it might be worth $1 million to certain people, but the bank might look at it and say, if we have to repossess this because you fail on your mortgage, we don't think there's going to be necessarily a ton of people that want to buy a horse-shaped house. So the difference can fluctuate greatly in value. And you want to have a good conversation with your mortgage broker and your realtor before moving on something that's really, really unique. A little bit of uniqueness, you're not really going to run into too much headaches. That's just going to add some character to it. But if it's really, really unique, like I say, then it's a conversation worth having up front.
Okay. So we'll jump into another question that's been asked by P. Gupta. And it's, I guess his or her question was, does it make a difference to get a mortgage from a bank versus other mortgage lenders? So I don't know, maybe you can just comment, but is this a question of, does it make a difference to go to a bank versus a mortgage broker?
Well, this is something you and I kind of talked about earlier today, Brad, where you've got your banks. Remember, I've said that there's over 30 lenders. So you really got kind of four ultimate sections of mortgage lending, four umbrellas, if you will. You've got your major banks. So that could be a Manulife, National Bank, Scotiabank, RBC, TD, all those big five banks. So you got your big banks. Then you've got your monoline lenders. The monoline lenders are the smaller institutions. They're companies that are basically somebody like Marathon Mortgage, Dominion Lending, and they're still very, very safe. It's safe to have your other lenders. MCAP is another example of a monoline lender. You've got your credit unions, and then you've got your private lenders, which again is going into privates, which is the higher interest rate. So we won't go too much into that. The major differences that you'll see, Mr. or Mrs. Gupta, is that the penalty is the biggest difference, I would say, between banks and monolines. Monolines are very safe. People are always like, oh, well, I haven't heard of, Marathon Mortgage before. Is it safe to have my mortgage with them? It would be very, very minimal to non-existent chance of any issue happening with your mortgage if something did happen with that company, because one of the big banks or other big lenders would come and buy that whole portfolio of mortgages anyway. So there's no risk, I would say, difference in going to a big bank or a monoline. They're all in that position for a reason, and they're heavily regulated by the government and many other regulation entities that are overseeing them, that they're allowed to lend out money. But the major difference would be that you're going to get a little bit lower interest rates sometimes for the monolines because they have some more promotions that are released on an ongoing basis. But the biggest difference is the penalty if you ever go to break your mortgage. And most people get a 5-year fixed mortgage. Everybody thinks, oh, I'm not going to break my mortgage. The average person breaks their mortgage in 3.5 years. There's a lot of stuff that can come up, whether you're switching jobs, you find that there's lower rates out there, whatever else. The biggest difference is the penalty if you go to break your mortgage. So with the big banks, they have what's called interest rate differential. Monolines also have interest rate differential. It's a calculation or a formula that they use when you want to break your mortgage before the end of the term. And the formula that the banks use is a little bit less friendly to the customers and can be a lot higher penalty if you ever need to break your mortgage. I'd say that's one of the biggest differences between the two.
Yeah, and just to piggyback off of that quickly, so every time I've gotten a mortgage, I haven't even thought of penalties to break it because I've always just thought I'm going to be there for at least that long. And I think in the last 3 moves, I've had to break 2 mortgages and had to pay those penalties. And that's just something that you want to make sure that you're considering that as well when you're doing your comparison, because some of these penalties, like the worst one I ever had was $7,000. So it was $7,000 out of equity that it cost me to kind of break out of my mortgage. So that is something that definitely you want to pay attention to.
And I want to comment on that really quick because there's a really important point with that, Brad. And I hope that does answer your question, Gupta. When you're going to break your mortgage, this is a time where you should talk to somebody at your bank or your mortgage broker, ideally, that cares, because sometimes you can avoid the penalty. You can never just go ask and say, oh, I'm a long-term client, can you give me less? They're never going to do that. But there's different things you can do. You might be able to do a port, moving that mortgage onto the new home if you're buying a new home. You might be able to make a lump sum payment from some borrowed funds or some savings that you have and lower it that way. There's a few different things you might be able to do to lower your penalty when you're going to break your mortgage. And that's where you want to talk to a mortgage broker or a banker that you really trust to say, here's what I'm about to do before I pay $2,000, $3,000, $4,000, $5,000 extra in penalties. Do you have any insight that you can give me to minimize that penalty?
And for everyone just signing in or logging in or just coming on midway, the whole purpose of this is if you have real estate questions or just area questions about the Greater Toronto area. So I was born and raised in Brampton and I live in Whitby right now. I spent 5 years in Oshawa. So I'm in the Durham region now, but I came from the Peel region. So I'm well knowledgeable about what it's like to pretty much live in and around Toronto. So if you have neighborhood questions, you can ask. And then I have Sheldon here for the mortgage side of things. So he's one of the founding partners of Gemba Finance, which solves all the financial questions. So if you have finance questions or mortgage questions, you have Sheldon here to answer them. And I find that most of the questions today have been focused on mortgages because those are the questions that a lot of people, because it's dealing with finance, are a little bit more reluctant to ask. So this is your opportunity. You have somebody on the mortgage side of things here that if you have questions, type them in the comments, and we'll do our best to answer it. So far, I think Sheldon's been able to answer every question. So if you have a hard one, I challenge you to try and stump Sheldon. Sheldon, nothing against you. You've been doing great, but
fire away. Harder the better.
Fire the questions away.
And I would say, even if there's questions that people, let's say, Brad, are too shy or gives some of their personal detail they don't want to put in the chat, you've got our numbers up there. Brad is kind of toggling back and forth between both of our phone numbers. Again, we work weekends, we work evenings. Don't be scared to fire a text, even tonight or any day in the future. And we can just respond to you through text until you're comfortable having a conversation on the phone and just answer your inquiries that way.
Yeah, and in my videos, I always mention about you can also send the carrier pigeon, but for this mortgage questions, just stick with the text, email, the more typical ways of communicating. And then I guess so we'll jump on to another common question that I get. And so I guess, what are condition dates and how are they managed differently for each unique file?
So yeah, it's a really important topic. And again, it's something that a good conversation wants to be had between the client and the mortgage broker. Otherwise, it's going to create, a lot of pain on your side, because if you don't get a good communication up front as to, what the realistic timeline is, sometimes if there's, I think you mentioned to me earlier today, you had 13 offers on a home. You may not necessarily, you might need to judge, okay, I really love this home. Maybe there's an interest rate at one place that's 2.59 and the other one is 2.49, but the 2.59, I can get that approval within 3 or 4 days. And the 2.49 has a whole bunch of applications in at that lender, and it's going to take 10 business days before they can even touch the file, which is the case with some lenders right now. You might want to just bite the bullet, take that small, tiny 1.1% higher interest rate and get that approval in place.
Yeah, no, it's a very valid point in paying attention. That's why it's important to deal with good people. I'm not the type, and through my videos, I provide a ton of free information out there for pretty much everybody. If you've researched on YouTube or Google, the videos will come up and the information is just out there for everybody. And it's just make sure if you're not dealing with us, that at least you're dealing with good people that can manage the whole process so much easier. Because like I said a few times throughout this, it's an easy, fun process and an enjoyable experience if dealing with the right people. And it can be a nightmare of a situation if you're not dealing with the right people.
We can't mention that enough. It can be, you can have an incredible amount of stress if you're dealing with the wrong people. And if you're dealing with the right people, they're going to minimize. You may always run into hiccups, different things, the lender's asking a bunch of questions, weird things happening with the appraisal, but you should have the kind of people that you trust and have the competence where no matter what hiccup or interesting thing may come up along the way, they're able to really tackle that and navigate it together as a team very quickly. And just to maybe more clearly answer your question on condition dates, Brad, is the condition date is really that date that you want to avoid getting extensions on, especially if there's multiple offers, because then Brad, as the realtor, has to go back, ask for extensions, ask for extra days. And if you had a good conversation with your mortgage broker and your realtor up front, we're able to set a proper expectation as to when we can get you that full approval in place, because the condition date is the date that you're basically legally binding yourself to say, I'm buying this house. And if you waive your conditions and you're now unconditional, then if you don't complete purchasing that home, you could get sued from that seller, especially if they're buying their new home depends on you buying their home. So it's nothing to be afraid of. It just means that you want to show that extra discretion and having good communication with your realtor and your broker up front about where things are.
Yeah, and just on top of that, so sometimes people think that if you run a little tight on time, that it's not going to be too difficult to get an extension on your financing or your home inspection. And the reality behind it is, just because you have an accepted offer does not mean other realtors are not calling the listing realtor to find out what's going on. And oftentimes what happens is somebody doesn't realize how much they wanted a house until they've missed out on that house, or they got outbid. And now all of a sudden they've had a few days to think about it and really regret not getting it. And they'll sit there and it's not legal to be doing this, but it's not to say that it doesn't happen. Is that realtor that missed out on that bid will call that other agent and say, if it doesn't go through, my person's willing to go firm, and they're going to come up $40,000 from what their initial offer was. They'll do whatever it takes to try and get that house within reason, because they really want it. So then that realtor might be the listing realtor might be inclined to not give that extension. And you've already tied the property up for 5 days. And I've had it myself where I needed to grant or ask for an extension for somebody, and the realtor flat out said no. And so the deal fell through, and then the financing came through the next day. So we had to do a whole new offer, and it was a firm one because we had already done the inspection. The financing was now good. So just to think, or just keep in mind that asking for an extension is not always guaranteed that it will be granted, because sometimes people they don't want to give the extension and they just want to move on to the next person, or they just start to doubt your ability to actually get financing. So it just a little bit of food for thought for that. So move on to the next. Sorry.
That's a good point too, because I think from the client's perspective, they always think, oh, it's only 1 or 2 days extension, no big deal. Why can't they just give it to me? Well, this person wants to sell their home. They have a lot of things they're waiting on to move to the next stage in life. You don't know what's happening in that seller's life. So I've been in many situations where the realtor's gone to get an extension and it's just a flat out no. We've got other people that are ready to buy this house, and if you didn't meet that condition date, then too bad, so sad. So if you want to go on to the next question there, Brad.
Sure. So this is from Mr. or Mrs. Gupta. So I guess when upgrading your home, let's say to a bigger house, how does it work? It is a big topic, but it's an easy answer. So I guess a general idea for the process would be in terms of steps to be taken. So it's really, so there's not one answer that can be given for this. It depends on what your house is. So if you are in an area that's insanely hot right now, and you are an entry-level home, whether it's a smaller detached or a townhouse or something that that the demand for is so hot, pretty much you would want to buy first, because if you sell first, it might be hard for you to buy. But again, it depends on the market you're buying in. And that's where it's understand the market to know, if you are looking to shop $800,000 homes now, on average, how fast are they selling? How much above ask are they selling for? Because you don't want to be in a spot where you sold your home and you can't buy a home. But on the flip side, you don't want to be in a situation where you have bought a home and you can't sell your house. And this is two things, I guess, area related on how hot the area is, but then also market related to, is it still a seller's market? So understanding the market, I guess, is the best way to answer that. Right now, if you were in that entry-level type price point that you are selling, it's insanely hot. And if you price it well, you're going to get a ton of showings, a ton of offers. So it will sell really quickly. So the step that I would kind of recommend, if that was your situation, find a house that you can buy first. Or if you're not comfortable with that, sell your house first with a very long closing date. I'm seeing closing dates now for February, which is about 120-day closing. To me, that's people taking advantage of the market, selling now, and then it gives them time to find it. And then I'm seeing closing dates on properties now in February, because these are people that have kind of done that. They've bought first with a long closing date so that they know they have a lot of time to sell their house. And then I guess when you are selling your house, you just want to make sure that your realtor is using professional photographers and they're not doing the pictures on their phones. You want to make sure that it's being marketed properly on, Facebook, realtor.ca, all the different Zillow. So you want to make sure that it's being marketed properly. You want to make sure that your house is easy to gain access to. So, anticipate for the first week of you having your house listed, pretty much that there will probably be I don't know, nonstop showings, because especially on a Saturday, Sunday, I find I have to book my showings 3 days, possibly 2 days in advance, just to make sure that we can get in. Because if I try and book a showing for Saturday on a Friday, odds are all the time slots are taken for that entire day. And that's 30-minute time slots within a 12-hour window. So that is 24 showings on a Saturday. And right now with COVID, it's really hard, because showings used to be, you could do an hour, and then you could actually have multiple showings at the same time. So like if you're having showings on your house, you could have 3 showings between the 1 and 2 o'clock time window, which was fine. But now with COVID, they're half-an-hour windows, and it's only 1 showing at a time. So the time slots are just being filled up like crazy. And then open houses are a little bit hit and miss right now. So it's not like you can just have an open house on a Saturday, Sunday from 2 to 4, and then everyone's just going to come within that time slot. So hopefully, Mr. Gupta, that answered the question a little bit for you. If you have more questions in regards to that, you can reach out to me. And it is a process that I've gone through personally myself, probably 5 or 6 times. I know I move a lot, and I think maybe it's because I'm in real estate and I always want the bigger and better and the shinier I don't know, house, I guess. So I've done it a lot. And just to go show, because sometimes people are a little scared of this too, where they have to buy and sell at the same time, what problems can happen. So just to go show how well this can go, in 2017, I sold 3 of my own properties. So I sold my principal residence where I was living, plus 2 rental properties. And I needed all 3 properties to close on the exact same day, so that my house, which was like we were kind of upgrading our house, similar situation to you, we needed the down payment from those houses in order to kind of close on our purchase. So if you're worried about having to close one house on the same day as you moving into your other, I had to close 3 houses on the same day, and problems happen. But luckily everything was managed properly, and we were good, and it went well. Another thing just to consider, and maybe Sheldon, you can answer this one, but consider bridge financing if it's an option. So Sheldon, do you want to maybe go into what that is?
Yeah, 2 things I'll touch on in regards to that question. One is just, and you've already touched on it, so I'll be brief on it, but the importance of the timeline. Managing the timeline of those closing dates for your old and your new house is super important. Bridge financing is taking on, potentially, depending on your situation, a whole nother beast, and that can work a few different ways. So ideally, you want your old house to sell before or on the date of the new home. If it's happening after the fact, you need bridge financing to kind of cover you until your home sells. So working on those timelines with your realtor and your mortgage broker is super, super important. And on the mortgage side of things, when upgrading your home, if let's say you're getting a bigger mortgage, and I'll just use some fictitious numbers here to explain. If you have a mortgage for $200,000 and you now want to buy a house for $400,000, and you want to increase your mortgage from $200,000 up to $300,000 on that $400,000 new house, you might be able to avoid the penalty altogether, port that $200,000 interest rate, and just get new money for $100,000 from that same lender that you're already with, avoid penalty, keep that great rate if you have one, and just get a new rate on the additional money that you're adding to your mortgage. So the timeline, as well as looking at how you're going to manage that mortgage and potentially porting it, are a super important part of that conversation, again, that you want to have as early as possible to help navigate.
So can you just explain and what is bridge financing?
So bridge financing basically means if the house that you're selling is closing after the house that you're purchasing, it means that you don't have the funds that you need from the sale of your home yet. So the bank is going to give you a separate bridge loan, which is temporary, which typically won't be allowed to go more than 90 days. And basically you pay off that bridge loan when you sell your house. So again, that's why I recommend usually you want to try to avoid bridge financing. You have to qualify for it with your debt ratios and everything. So you want to try to sell your house on or before the date that your new house is closing. But if your new house is closing before you sell your home, then you need to get some bridge financing for up to 90 days.
Okay, so from a financial standpoint, you say try to avoid it. And I guess from the real estate standpoint, like especially lawyers, lawyers, they always try and get bridge financing if possible, because it just alleviates a lot of the stress of closing on the same day. You do run the risk if the people who bought your house can't close on it, because now technically you have a mortgage on 2 homes and you don't even have an accepted or a firm offer on the house that you sold, because those people couldn't close on it. So it is a risk reward type situation. That, some people do it because it allows them to, they get their new house on a Wednesday. They don't have to schedule their move for 7 days. So it gives them time to either paint their new house or bring over some of their valuable stuff that the movers will take everything else. So it alleviates the stress. But I guess the only risk behind that is if the buyers of your house can't fulfill it. So that's where you want to make sure that you have solid buyers, that you're going to have 2 mortgages and you're going to have to really rush to sell your house, because you don't want to be paying 2 mortgages for 60 days, which would be like 2 monthly payments, because bridge financing isn't cheap either.
Yeah, and it's not to say that people should avoid it like the plague. I mean, there's a time and a place for bridge financing, and sometimes you just can't get those dates to match up the way you want. And again, it just means that if at all possible, it can be easiest for the clients. But if you can't get those dates to line up for whatever reason, it just means make sure you have a good communication again with your realtor and your mortgage broker, and they should be able to make it work. But you do have to qualify separately above and beyond into your debt ratio for that additional bridge financing during that period of time. So you want to make sure that you have room in your debt ratio, and those again are just early communications and calculations and assessments.
Okay. So I guess we'll just jump in again for anybody who's kind of come on, because what I've noticed with these is people will hop on and then hop off. And so if you're just hopping on now, I'm a realtor here in the Greater Toronto area. I was born and raised in Brampton. I moved to Oshawa, and then I live in Whitby now. And so I'm here to answer your real estate questions or your area questions. So if you have questions about what it's like to live in Toronto or Whitby or Oshawa, even Brampton or Mississauga, I haven't done any videos on either of those places yet. But if you have those questions, you ask me. And then I have Sheldon here for the mortgage and the finance questions. So if you have questions about getting a mortgage, the process involved, tips and tricks, when can you start getting a mortgage, anything like that, he's here to answer those questions. If you prefer not to ask these questions publicly, Sheldon's number is on the screen there, and you can reach out directly. He's not a 9-to-5 worker. Neither am I. It's a Sunday at 9:22 right now, and we're both going right now. And pretty much we're here to answer any questions that you have. And Sheldon, do you want to just introduce yourself again for the people who have just recently signed on?
Yeah, and again, just to back up what you said, Brad, I mean, we do work all outside of all hours. I've got actually a client conversation after this Facebook Live. So my name is Sheldon Brow. I'm with Gemba Finance. I work with my business partner who's in Toronto. I'm on the East Coast. We do mortgages remotely right across the country, and we've done over 2,000 mortgages. We've got access to over 30 lenders. We're giving people the same advice we'd give our mothers. We don't want to be these commission-based salespeople. This is an important process. You want to deal with somebody that cares and that's going to be quick to respond and give you honest advice that you can trust and that comes from a lot of experience. We've got about 15 years in the industry, and we work closely with Brad on making sure that clients have a good holistic experience.
Okay, no, great. So I guess Mr. or Mrs. Gupta, another question. And yeah, I don't mind the questions. I like the questions because if I don't get asked questions, me and Sheldon are just gonna, provide information that we feel relevant. But in the fact of the matter is, a lot of people might not care about the stuff we want to talk about. So if you want to hear specific things, now's your time to ask. So I guess Mrs. or Mr. Gupta was asking about how practical and manageable it is to live in Oshawa and then work in the GTA. I guess the motivation behind the desire to live in the suburbs at a lower cost of ownership. So this is something that I actually did. So from 2012, when I first moved to Oshawa, and I was living at Simcoe and Taunton, so on the north part of Oshawa, and I was working in Mississauga, so 401 and here in Ontario. That's where my office was that I worked. So I did that drive, and I think I did that for maybe a year and a half. And then my company I was working for, they moved down by Sherway Gardens. So now I was driving from Simcoe and Taunton to the 427 and the Gardner Expressway. And so it's a drive that I did. And this was before a lot of these companies were allowing people to actually work remotely and from home. A lot of people now or companies have realized that, it's completely possible for people to do their job from their house. And I've had it where people who have moved here and been hired on by different companies, they've actually negotiated in their salary to work from home 3 days of the week. So they're only commuting 2 days of the week. So what that has done, it's kind of worked out because over the last few years, the population growth of the GTA has gone up. So the 401 and the 427, the 404, the Don Valley Parkway, Gardner Expressway, QEW, all these roads have just been, they've become more busy. And with people working from home, it's taken the stress off of those roads again. It is, I'm not going to lie and sugarcoat it that it's an easy drive, because when you're dealing with the winter, a typical, depending on where you're working in the GTA, a typical 1 hour drive can easily turn into a 2.5 hour drive, because when it snows and the roads are icy. Salters don't always go out. The traffic can be bad. So there are bad parts about it, but there are options. And the GO train is one option that a lot of people have been taking, because if you are working in downtown Toronto, for instance, you can get from Oshawa, Whitby, Ajax, or Pickering in anywhere from 55 minutes to 30 minutes, but you're not having to drive. So that's just, hopefully it helped paint the picture a little bit about what it would be like to live in Oshawa and then work in the GTA. But it really depends on whereabouts.
Two things I'll just mention on that is I do see a lot of clients right across the country where they're kind of trying to move themselves to the outskirts of town, because within the GTA, within Halifax, within downtown Vancouver, it's a lot more expensive. People want to live on the outside. There's a lot of people going to do that. And I'll submit to you that, you can't make any guarantees, but it's conceivable that you may end up having the same length of drive as you would. So if you worked in Mississauga but lived in Scarborough and it's heavy traffic and you're not able to get on the right highway, you might take as much time as you would to drive from Oshawa. Perhaps from Oshawa, you're able to take a highway depending on where your exits are. So it's something that, would take a bit of assessment, something probably you would want to have maybe a closer conversation with a realtor so he can look at some different paths that you can take. But it doesn't necessarily mean you're not going to run into still those really long drive towns within the core, because there's heavy traffic in those downtown cores. I remember one time I was going from Yonge and Eglinton in the morning just to downtown, and that's not very far to get to the waterfront, and it took an hour and a half. So it really can, sure, it's going to take some more time from Oshawa, and I'm not suggesting everybody should do it, but a lot of people are looking at that for more affordable housing, yielding a good savings on their monthly cash flow because of that. But of course, you have to pay for that with your time sometimes, and maybe that time that you're paying with it for wouldn't necessarily be that much more than if you're, commuting across a busy town in the inner core of their streets.
Okay. So I think that pretty much wraps up. If there's any more questions for anybody out there, now would be the time, because we are going to wrap this up in the next couple minutes. It was a great live where we did get a lot of good questions, and it was much more enjoyable talking with somebody rather than me just always talking myself, because I'm not always extroverted. So it's always nice to have that person to talk to. So for anybody who's ever watched any of my videos or anything like that, I always ask for people to subscribe, because it will actually help you keep track of the videos that I'm posting. And then with Sheldon and I collaborating on future videos, same thing. When he has these mortgage videos that get posted, he will, you'll be notified of them as well. If you have mortgage questions or anything like that, I put my full trust into Sheldon and Chris, and they have not let me down at all yet. So they are people that they're good people that I fully support. And I find makes my job a lot easier when you are working with good people.
Yeah, we should thank you everybody for your questions. Again, don't be scared to give either one of us a text. Really, we're not going to pressure you to be like, go ahead and rush and buy a house before you're ready. We're not going to try to pressure you to work with us. Have a light conversation. Send an email, send a text, ask a few questions, and get comfortable, and just gather information. Sometimes people don't even know if they're ready to buy a home, and our job is really just to patiently and intelligently inform you until you can decide what's best for you. I think Brad would agree.
Yeah, no, 100%. And so everyone, thanks for watching. Sheldon, it was great having you on. Maybe in a few weeks we'll do another one of these to, other questions for mortgages and anything like that fester. Gives everyone another opportunity.
For sure. Thank you again, and thanks everybody for the great questions.